The Q4 GDP data has sprung a pleasant surprise, taking the FY23 growth rate to 7.2%. With this, several brokerages have upgraded their GDP forecasts for this financial year, and the new president of industry body CII expects growth rate to hit 7.5% in FY24. R. Dinesh, the Executive Vice President of TVS Supply Chain Solutions, has been newly elected as the President of the Confederation of Indian Industry. Now, economists are pointing to several tailwinds for growth this fiscal. They believe capital expansion has started to take off, and that corporate and bank balance sheets being in much better shape will allow some risk-taking. So, let's speak with Dinesh on the state of the economy and his blueprint for growth as the head of the CII. Dinesh, many thanks for joining us and congratulations on taking over as the president of CII. You take over at a time when things are looking good, both at the macro front as well as the micro front. I want to understand from you, what do you feel most confident about in terms of the tailwinds that I just spoke of?
Thank you, Shereen, and yes, a great pleasure to be with you. I think if I look at it from the economic perspective, I think the fact is that maybe India has really become I would say, the island of growth, right? More than 15% of the global economy's growth is going to come from India. What are the reasons why I think, as you said, we are more than comfortable is the fact that we see the good expenditure on the infrastructure leading to a virtuous cycle. And that cycle is obviously attracting increasing domestic demand, and therefore that attracts foreign investment to come in or Indian investment to happen, and that again perpetuates that cycle of allowing opportunities to export, and that leads to the good growth for all of us. The second is what you already mentioned, that the balance sheet of both the companies as well as the banks are much more better than ever has been. And last but not the least, if you look at the various opportunities which are happening from the global economy, I think all of it play to our favor. Finally, I think the way in which this government has done the transformational reforms, I think has attracted interest from all over the world. Wherever we have been meeting investors or potential investors into India, we have heard great interest in looking at this, and that's what gives us the confidence that we can hit this rate of growth.
Okay, speaking of rates, let's talk about interest rates, because ahead of the last policy, CII had put forward a request to the MPC, to the Reserve Bank, to decouple and pause. And perhaps the Reserve Bank heard what you had to say, because there was a pause. It was a hawkish pause, but of course the commentary suggests that things may change. I don't want to preempt what the MPC is likely to do on the 8th of June. But what is the expectation on that front as far as rates are concerned? Do you expect the pause to continue? By when do you expect or hope that we could perhaps be prepared, be ready for perhaps even cuts?
Yeah, so I think if you look at it, we are definitely saying that we want the pause to continue, but the stance to, as you said, to change from hawkish to neutral, and that, of course, that is more helping the perception of what the future is going to be. And I think the RBI governor, when we recently met, was very clear in saying that he is obviously not the deciding person, but what happens at the ground level, especially with inflation, is going to be the important factor. I think from CII's perspective, we do understand and we believe that inflation has to be kept in check. And right now, we see all the right signals coming from, not just from the market, but also from our survey, which we did with our CEOs. But having said that, the target he has set for himself is 4.5%. And therefore, we have to wait and watch and see by October that it comes to that level or below that level. Then we can look at a reduction in interest. Right now, for us, the focus is on making sure it's a pause and changing the stance from hawkish to neutral.
Yes, we'll see if it is in fact a pause and a change in stance. A pause perhaps is given. But, Dinesh, you spoke about opportunities and you spoke about business confidence. And in that context, I want to address the issue of private investment. The chief economic advisor at the CII meeting, which I was a part of, did suggest that he believes things are going to pick up and accelerate further from here on. We're already seeing signs of a pickup. But when you speak with your members today, what's the indication that you get? When do you expect them to start adding fresh capacity? Are they looking at adding fresh capacity in this financial year? Which are the sectors where you believe we will see those industries take the lead in terms of adding capacity?
So actually what has happened, we have our annual CEO survey, And what we are getting as feedback is that the capacity utilization across all sectors has now crossed more than 75%, which is the first signal to say that investment is likely to happen. In a few sectors which are related to infrastructure like cement and steel, and most importantly sectors like machinery are where we are actually seeing that exceed of 80%. And machinery is a very clear indicator because they will be supplying to various other private sector players, and that indicates that this is now hopefully coming across all sectors. So that is one side. On the services side, if you look at it, all of us know what's happening at the hotel level, at the airlines level. So all of it are all factors which we believe will mean that private sector capex will come back. I think the CA was right when he said that. And if I look at it from what we see as ground level reality as well, we see commitments having been made by the CMIE data. You actually see that those commitments have increased by 79% over the previous year. And if you look at the absolute number, we are speaking about close to 25.7 lakh crores. So net, if you look at it, it is a clear signal that private sector capex will continue to, or rather will happen and will continue to be committed to for future growth.
You know, speaking of future growth, and you talked about the export opportunity as well, Dinesh, again, as the president of CII today, what is the to-do list that you are presenting to the government to try and aid exports? We've, of course, seen a little bit of a bumpy road the last few months as far as exports are concerned on account of the global uncertainties. But, you know, we continue to be about 2% of global share at this point in time. So what's on the to-do list on the export front? And again, in conversation with your members, where do you feel most confident of in terms of new growth, fresh growth coming in from exports?
So I think obviously that a continued focus on services export is definitely there, but we see the green shoots in terms of the manufacturing exports as well going up. And like I mentioned, as overseas investments comes into India, they are coming in not just for the domestic demand, but obviously to look at export opportunities as well. If you look at what needs to be done to further facilitate this, I think we have already looked at further fast-tracking the FTAs which the government is looking at bilaterally. And we believe that that presents a great opportunity for us to be able to further focus and grow our exports. Obviously, we spoke about having more National Trade and Promotion Board to be set up to further support this. And finally, like I said, the services side, the traditional sectors have done well, but are there newer areas which we can focus on, which will include tourism as well?
You know, one of the concerns that has been flagged, of course, is the growing regional inequities. You know, we've, of course, seen that being a legacy issue as well, where the South has done much better in many parameters, including socio-economic parameters, but also in terms of economic growth. Now, how as an industry body, are you addressing this issue? Has there been any conversation and dialogue with state governments, with the central government, on what can be done to ensure that we have much more equal distribution of growth?
Yes, I mean, obviously that's something which we continue to work with the states on, and it's not something which is going to happen overnight. And as we look at it, there are two ways to look at this. One is even within the states, there could be some areas which are actually doing better and some areas where there is not that a growth available. But all in all, if you look at today, I think there is a clear conscious awareness, and the competitiveness has been built in amongst the states to make sure, A, that they attract the right set of investors to come on board, whether it be manufacturing or other sectors to focus on. And as they pick and choose the sectors they want to play in, I think CII has been playing the lead role in supporting them and making sure that they are able to present themselves and orchestrate that availability, whether it be of the skill or, I mean, the people capability or the people capacity, as well as the land availability, etc., if it comes to manufacturing. You know, one of the areas which we have spoken about is to... Sorry, go ahead.
No, go ahead.
No, I was saying one of the areas we spoke about was building this National Land Bank, which will also help underline where land is available across in plenty, which can attract more manufacturing investment to come in.
You know, speaking of manufacturing investment, and you spoke about foreign investors looking at India in the context of setting up manufacturing facilities, given the diversification and de-risking of supply chains that we are starting to see. What are you hearing from SMEs? How are they hoping to leverage and capitalize on this opportunity? Again, which sectors do you believe within the manufacturing space are likely to be the biggest beneficiaries?
And that's a very good question, because I think one of the core focus areas for CII has been on working with the MSME members in the MSME sector in themselves. And within the MSME sector, I would call there are, what I would call as tier 1, tier 2, tier 3, and the tier 3 being what I would call as livelihood businesses, which really do not look at return on capital employed, but actually look at the cash flow which they generate. And as long as they have surplus cash flow available for their livelihood, they are happy to continue to exist. I think it's one of I would call it the primary responsibilities of CII to work with its members, because most of this sector, maybe 80-85% of this sector, would be working with the large corporates as tier 1, tier 2 suppliers. So the first is obviously to upgrade their capacity and capability to face what I would call as the new challenges which are going to come in from a manufacturing perspective, from the digitization perspective, as well as preparing for the future. The second is the skill capacity augmentation, and that's something again CII has committed to work on to make happen as we go forward in this journey. And last but not the least is to prepare them not just from the future aspect of it, but to make sure that they are able to coexist and grow as the sectors or as the new sectors comes in. Where do we see this happening? I think it cuts across all manufacturing, obviously services. I mean, if I look at even services like the new age services like supply chain, etc., there are large opportunities for MSMEs to partner with and grow.
Right. Dinesh, 2024 is, of course, going to be the election year. So what's the expectation? We have, of course, seen the government say that it continues to stand by its promise of privatization. But with the exception of Air India, we haven't really seen much take off, no pun intended. And on the other aspect, which is, things like taxing the rich more, etc. What's the expectation? There's been a lot of talk around a capital gains tax overhaul, which was expected to happen in this budget. It didn't go through. What's the expectation on both these issues as we head into an election year?
I think if I look at it, this government actually has walked the talk, and I think they have stood by whatever they have committed to, and we have just seen the budget which was just over, which I would call as a dream budget from various aspects of it. Therefore, I think our expectation would be that this would continue, the necessary actions would be taken to support the longer term growth of the country, of the economy, and I don't think they are looking at any short term actions which are either going to impact or affect any of this. I think the second question with regard to, is there going to be any actions on, increased taxes, etc. My understanding is that this was the last budget of this government, and the next one will be a vote on account. So I don't expect that there will be any major changes taking place unless anything changes dramatically in the economy or the rest of the world. So for us, I would look at it as, and we respect that this government continues to stay the course, walk the talk in terms of the infrastructure spend, do what has been committed in this budget, and we welcome that and we really look forward to that.
So the single biggest priority for you, Dinesh, as you now start your tenure at CII?
So I think to make Indian industry more competitive, and I have already stated that from our side we wish to work with various stakeholders in the society to build trust and make sure that we are positively making an impact, and we really don't look for mandates from anybody else to create that stakeholder relationship and build the trust in our partnership. So for me, the focus is obviously growth is going to happen as we build the competitiveness of our industry and work with various sectors, like you said, starting from the large corporates all the way into the MSMEs and the livelihood businesses, and build trust as we do that.
All right, Dinesh, we wish you the very best of luck. Many thanks for joining us here on The Record. Appreciate your time, and we wish you the very best of luck.
Thank you, Shereen, and look forward to interacting with you in future as well.
Absolutely. We will take a break here on The Record. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.